Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Okay, well I started off last week with one video on Bitcoin in the hopes that I would get multiple videos done throughout the week, and unfortunately I wasn't able to. I was and still am recovering from COVID at the time, and my throat just deteriorated literally 48 hours after that, to the point where I just couldn't get any work done. So feeling better now this Monday, hoping that it stays the week, hoping to actually catch up now. I'm generally on the mend, I feel. So over the last week, all I've been able to do are short little videos that I posted on the Discord and on the Patreon to help keep my patrons up to date, and we've mostly been talking about crypto, to be honest, and Bitcoin specifically, talking about the count. So having covered that last week, we're going to start this week back on YouTube and talking about gold and silver. So I'm actually going to start here on the silver chart first for a change. Okay then, so let's just clear off the count for the moment. And I just want to share with you some classical analysis first. So let's bring up the volume range, volume profile, and let's bring up the volume at the bottom here. So what we've done since the March 20 low, we've come to a high and we've come back to the golden zone, 61.8 to 65, and we've bounced. It bounced off of all of this prior support and resistance going back ages at the roughly 1660 level, okay, in the golden zone, and we've bounced back up. From there we've come to the 50% retracement from high to low. So from the high here in February down to the low here in when was this, August in 22, and this was February 21, coming down into August 22. We have this long correction back into the 61.8, and then we bounce back into 50% of it. This is exactly where our point of control is, where all this thick prior trading is. Okay, and if we just bring up another FRVP of the move from the high to the low, okay, we can see quite clearly that it's just supply and demand. Okay, we're coming back into supply where previous sellers have sold from, previous points of control acting as resistance, horizontal prior support acting as resistance, and prior resistance acting still as resistance after coming into demand and bouncing. Now in the last week we've had our most impressive close in weekly volume since I think May of 22. So we've had a significant ramping up of the volume in the weekly close. Now obviously there's a banking panic going on at the moment, and the traditional assets for safety are precious metals, so we're seeing some play here. Gold is just about 4 or 5% off the highs at the moment. Silver is a million miles away from its all-time highs, it really is, but showing some strength into the close last week. Now in the moves since this retracement to the golden zone into demand and this move back to the 50% retracement of this swing here, we've done another major swing, right? We've come back to the golden zone again, from this low to this high, back to the golden zone. So really the market's just balancing itself perfectly at the moment between major fib levels inside of these internal corrections of these pivots. So we've got, this is an internal correction for the moment, same as between this pivot here, this move here is an internal correction, and between the larger time frame pivot here and here, this is an internal correction. So it's all internal swings between major fib levels, and it will remain so until the previous high in February 21 is taken out, and then we're finally external of all this larger structure, and by that point I think we're off to the moon, to be honest. Okay, I don't want to be moon boy here in silver, but essentially after so much consolidated time within this pivot, a move through it I think would be a sign of extreme bullishness to come. We will likely retrace back because people buy the breakout and provide liquidity to short into it, but either way I think once it's been breached and back tested, we'll be on our way, and so therefore you can tell from all of this that I'm quite bullish, and still am. However, we are not out of the woods, not by a long shot, because we haven't cleared that high, and we're all still inside of all of these internal, these are all internal moves of all these external swings of all these pivots, right? then we're still basically potentially bearish. And if we have a look at support and resistance for a moment, did I put that? So that's just resistance at the point of control, isn't it? I did have somewhere. I must have moved it. Either way, it doesn't matter. Let's just take this downward trend. That's what I'm trying to talk about here for the moment. So we've got this downward sloping resistance as well. Right? We're still in a downward trend. High, low, lower high, lower low, lower high. We're still in a downward trend. That's why I've got this here as a major pivot, because although it doesn't take us external of this long-term move, it does take us external of this pivot here, and what that does is it breaks the sequence of the downtrend of low, lower high, lower low, lower high. So we really want to see that taken out. In the short term, the bulls really want to see this taken out here, the level of the previous high around 22.50, and then we want to move on to 24.90, take that out, and then eventually take out the highs. And I think on that circumstance, we are talking about a 1 and a 2 off of the March 2020 lows, and then it's off we go into an almighty 3. It could be a very powerful 3, but it could be an even more powerful 5th, which 5th wave extensions are quite common in the commodities markets, and precious metals qualify for that. So a lot of upward price action to come if the bullish count is correct, but like I said, we are still in a series of lower lows and lower highs. We're still technically bearish for the moment. Okay. The problem with waiting for a bearish swing, what is an internal correction, to finish, is that we end up buying breakouts, and then by that point we've missed an awful lot of opportunities to get in at a far better price. So we have to be prepared to think bullishly when everything is still technically bearish. That's how we make some money, and that's how we get some value out of our trades at the end of the day. So now that we've talked about the technical picture, let's have a look at the actual counts for the moment. So bullish count first, which is my primary, which is we had an impulsive move off of the March mini low, we've had an almighty long correction into a 2, and we've had our first 1 and 2 off of that low. This could be ABC, but with the volume coming in so strong last week, I think that's more likely a 2 complete, and now going into a 3 at a smaller degree. So now let's have a look at the count off of the low. We're going to come down to the 4 hour here. Okay. So 1, 2, 3, 4, 5. There's multiple ways you can try and count it. The simple fact of the matter is it's really messy at the top here. Okay, so like I said, my first instinct after seeing this move down was that this was a singular impulse wave, and I wanted to label it A, and then B, and then C to come deeper. That's still a possibility. The push from volume into the close of last week, and the fact that we came straight to the 61.8, and the fact that the swing high made at the same time in the gold market has been taken out by the gold price. I know that's a bit of conjecture. It's not exactly the most technical way of looking at things, but suggests to me that they both bottomed at roughly the same time, and we're now coming out of here. Alright, a break above this downward trend line would be a positive for the bulls, as it has been dominant. A back test of it and move higher would be very reassuring. A break of that major pivot ceases the downward function of lower lows and lower highs, ceases the trend, and then a final breakout of the high confirms that this was indeed the low down here. So a lot to do yet. I'm bullish, coming off of a 61.8. I think you kind of have to be. Really, you know, the worst case scenario is our stops now below this prior low. Where's my drawing tool gone? Okay, and then we get turned around and we come down in a C, or it's bearish and it's 1 and 2, and we get stopped out. So, but we are closer to the lows than we are the highs, so always better in terms of value point of view after a retracement to look at a long trade, even though technically things are still bearish, because we've got to be right at some point, and we want to be right as early as we can. Alright, that's the risk. It's the risk of trading, isn't it? You know, there's no risk-free trade. So that's the bullish count. bearish count, how we go lower, just going to turn that off there, is the downward trend remains intact. Okay, and this is the first 1 and 2 down off of the B wave of this final Z wave here, a triple zigzag, and we'll come down in a C of 1, 2, 3, 4, 5, come down lower. Still looking for this to be primary too. The only way either of these bullish counts, and they are both bullish in the long term, is invalidated is if we take out the long term low. Let's just zoom in. Okay, and we'll put the price on this one. Okay, invalidation $10.58. We fall below that, we're into new lows on the chart, and a much longer term correction going back many years is still playing out and is yet to complete. Okay, so even the bearish case assumes that that March low was the low. Right? If we come down below that, we're into something completely different, into something much bigger, and is still continuing. That would be the equivalent of breaking the same. Actually, no, it would not be the equivalent of breaking the March lows in gold. It would be equivalent of breaking the 2016 lows in gold. So, yeah, they're not the same asset, is my point. You know, silver's still languishing down here at the lows. Gold is almost at all-time highs. So, silver's got a lot of catching up to do. And if that ratio, the gold-silver ratio, is going to close up, as it does periodically over time, then silver has to move higher in order to do that. You could argue gold collapses and silver basically doesn't go anywhere, or even that gold collapses and silver races up in the meantime. I don't see that as being particularly likely, but I think silver accelerating to catch up with gold while gold continues to tread higher, I think that is perfectly believable over the longer term. So, but we have to look at the local invalidation point for this count as well, which is the prior high. So this is the invalidation point for this count. That's 22.51. So bearish count, looking for a retracement. We're into the 50 and 61.8 now. So if you get some kind of reaction from here and you're bearish, you see it move down, move back, that's an opportunity to short to new lows. Okay. If we're bullish, we'll clear this high, we'll take out that pivot, increasing the likelihood that this was 1 and 2 on a smaller time frame, breaking that downward trend, and then we're on to take out this major pivot to break the longer term downward trend. So that's how I see silver at the moment. And yeah, now let's come over and have a quick look at gold. Right, so here's the gold chart on the daily time frame. Let's just come out to the weekly for the moment. So, all-time highs just away from us. Very different chart to silver. We closed at 4.35% off of the all-time high. Or sorry, we should say this is a CFD, so I should say we're trading currently, sorry, at 4.35 off of the all-time high. So we're very close to getting to new all-time highs. We came back on the longer time frame into the 38.2 to 50% retracement territory for our expected wave 4, coming roughly to fib target. We also came to a 250 weekly exponential moving average, moved up above the 60 weekly exponential moving average, back tested it, and have continued to move higher since, taking out this high here. So, back above all of this volume, back above this point of control as well, looking pretty bullish overall. Now let's have a look at our various counts. So, long-term count, primary. I won't lie that it's been a mess it's been a mess getting down into this low, and it's been a mess getting out of here. Nothing about this has been clean on the smaller time frames. I've done the best I possibly can with it, so let's come down to the 4 hour for a moment and see what we can see. So coming on, let's focus off the move off of the low so far. There's a few ways we can interpret this, but this is the way I've done it. We know that this pivot in silver, we're still below this pivot here in silver. We're now above it in gold. So we have either done 1 into 2 here, and now we're off in the 3. Okay, and it's likely 1 and 2 within the 3 to come. Or this whole thing is corrective. So what do I mean by that? Let's have a look. We are currently at 138.2% extension of this move down, straight into the 23.6 and the 131.8. So this is right in the region of a flat pattern forming. So we have got the possibility of this being A, this being B, and this being C. We could get a zigzag, that deep zigzag in silver. We could get a flat in gold, and they could both make lower lows. Alright, but this should still be 1 into 2. It would be a more significant correction, taking longer than the small first move here, and then we'd be off in the 3. So that is a possibility, but that's not the primary count. I'm going to give it the benefit of the doubt because of the increased volume and increased strength and momentum we've had coming off of the low here. So I'm going to give it the benefit of the doubt of saying that it was 1 A, B, C into 2, and now we've gone 1, 2, we're in a third minuet degree wave, 3, 4, 5, and this will be minute 1, and then we'll come back in minute 2 once that arrives, and then we'll press on in minute 3 looking for minor 3, minor 4, minor 5 of intermediate 1. So I'm actually leaning on the idea of a very, very strong fifth wave to come in gold. I could be wrong, but that's what I'm leaning into at the moment after such a substantial correction and so much time going sideways. I'm leaning towards a more violent move, after so much compression, that we will move higher. We've come back on the daily time frame straight to the 250-day exponential moving average, right above our point of control here, in amongst all this thick trading, and then we've bounced. Now we didn't get a deeper retracement like we did in silver. We did not come back to the golden zone. We came back roughly between the 38.2 and the 50. So very shallow too, admittedly, I will say that. That doesn't look particularly convincing from the point of the wave 2, but this move is very powerful off of the low, just as it was with silver. So going to give it the benefit at the moment of being wave 1 complete here and wave 2 to come. So I don't know where and why I deleted that. Let's just put it back in. 1, 2, 3, 4, 5, and minor degree. So the way I've got this breaking down at the moment in the short term, and it is really a bit tricky, that ABC is a little suspect, but it doesn't overlap. I can't get it to work as a diagonal. I think it's just a funky looking impulse. It does subdivide like 1, 2, 3, 4, 5 here in the 3, ABC into the 4, and then we can just about squeeze out 5 in here, but it's not pretty. It can't be 5 down as a single move if we went to a new high, because it'd have to be ABC. So I'm accommodating the idea that it could be a flat by saying ABC, ABC, 1, 2, 3, 4, 5. But I'm just going to say perhaps it's just a single zigzag into 2. That's my preference for the moment. We've got 1, 2, then a lot of smaller waves. 1, 2, 3, 4, 5, 1, 2, sub-minuet degree, 1, 2, now into the third of the third of the third of the minute 1. So this should continue higher in the meantime until we top out, and then we'll roll back into all of this prior trading again, and that will be our minute wave 2, and then we'll press on the minute wave 3, and that's the best I've got for you at the moment, guys. So both counts, both primary counts, gold and silver, are bullish. We've come back to major moving averages, we've come back to major fib levels, we've come back to major support, and we've found support and we've bounced higher. So got to keep our bullish hats on for the meantime, unless we see something different, unless we see the price roll over violently. So on that note, let's finish off with the bearish count. I think that's only fair. and we're going to have to update them while we're here, because I think the bearish counts I had have been invalidated. Let me just find that. There we go. Put that into there. So where are we? Right. So this is the idea that we had a flat 1, 2, 3, 4, 5, A, B, 1, 2, 3, 4, 5. This has now become a 3-wave swing instead of a 5-wave swing, so that's just flat out wrong now. So if that's an impulse, we'd have to try and get it to finish down here. So I think the only way we can really do that now is if we just move the B. Let's just unlock the whole thing. Move the B up to here. We'd have to have, bear with me, this is the A off of the low. Get that arrow out of the way. This would be the B, and this whole thing's a zigzag. Really bad proportion between the time length of the A and the C so far, and not much room to get it finished. So I think we'd have to also now move the A down to here. We'd have to use the same diagonal completion. Okay, bump, 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 bump to get the 5th. And then this is 5 in an A, B, and now we're coming up in a C to get the B. And then the B's got to come in prior to the all-time high. That's the invalidation point now. Okay, because this could have been 5 or in a C wave, but it simply doesn't look like it now because we've got this big 3-wave swing instead. So I think looking at it as a zigzag retracement is the only viable option. I'll just put the invalidation price in there, save it, and we'll see if we have another bearish option to work with here. It's basically the same idea but on a bigger scale. So this is not A, B down into C, it's 1, 2 of an A down. So once again the same invalidation point, it has to be the prior high. All bearish counts rely on that. If we break to new all-time highs, those bearish counts are no longer valid. I've never been a fan, to be absolutely honest, of the bearish counts here in gold. I can't find an impulse off of the high, you know. So, and I've just realised I'm being unfair really by saying that's the all-time high, because it isn't, is it? I just realised it's actually this high back here. It's so marginally higher. That's our actual invalidation point. Sorry, I was talking about the alternative count. That is true because I'm saying A, B. Although then again, no, sorry, if I'm saying 1 and 2, it is here because I can't see any other way that couldn't have been the high. So excuse me for talking absolute nonsense. Right, so the only alternative, and I've never been able to find a way of doing it, would be that this was the high, and this is 1 and 2, and this is 1 and 2. Right, so you've got extremely deep retracements in the 2s, and that's just because I cannot find a motive structure here. This looks corrective to me. Okay, flat, and another move down there. So there you go. So looking for a break of the all-time high now in gold to just get rid of all these bearish ideas, get rid of any of these bearish counts, and then the primary, which I've had for freaking ages. I can't even remember how long I've had this primary count now. I was bullish since the first pivot off of the low back in 2016. So we went 2016 down into here, 2018. So I've been bullish since making that higher low, and it's worked out pretty well so far. So I'm going to continue to follow that long-term count and see how it develops. Alright then guys, we'll leave things there. Thank you for joining me on this technical analysis of gold and silver. I hope it's been useful to you. If you're new to the channel, And please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. As always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated, especially over the last few weeks where I have not been at my best. Much appreciated. If you're interested in joining the Patreon and unlocking all the various benefits and all the extra content, including all the educational Elliott Wave stuff and the technical analysis stuff and all the other benefits, and click on the link in the description box below. Head over, have a read of the various tiers, and feel free to sign up at your leisure. Alright, guys, take care of yourselves. I'll be back with you as soon as possible. All the best. Bye bye.